if they've already seen quite a bit of loss at this point in time, then they've learned with their gut how investors, no, ought to be. Okay? Now, if they own good counters, like I mentioned, no, counters that pay regular dividends, counters that still have good prospect, which I think a good number of our listed companies are, then they can they can simply hold on. The tendency now is that when they see a spike, they will sell. No? I think that will be the natural reaction. So again, at that point in time, I would reassess, no, whether the risk is still, shall we say, still overvalued, i.e. the product is still cheap.
Hey guys, so in this video, we're gonna talk to Gus Cosio. He's one of the people who taught me how to invest in the stock market. He used to be the president of First Metro Asset Management. He used to run and invest in a mutual fund as well. For this video, he's gonna share his principles on what his take on the market is. Is it cheap? Should you come in right now? Where are we in the grand scheme of things? Is this different from the 97, 2008 crash? If you have cash right now, you bought stocks right now, should you actually avoid the market? Should you come in right now at the point that there's a lot of fear? So if you want to know more about that, check this video out.
Standard deviation, saying that, we're already 2 standard deviations in valuations. Because that's all behind us now. There are other considerations. No, and this was pre-COVID-19. So I was willing to own the market at around 6.8, which I still own it now. But then again, it went beyond that. No, considering that it's COVID, it's something that creates a lot of uncertainty, and that's precisely what the market is pricing in: uncertainty, and it's not pricing in value. Now, if you've attended most of my seminars, no, where I talk about supply and demand, no, supply and demand being reflected in the price, I talk about the price of risk. In other words, when risk is very high, people put a significant premium, no, on the price of risk. Meaning, the absolute value, you have the real value, and you have the risk value, which is an options theory, what they call this, the volatility value. Okay, so what happens is that when in situations like this, where we can see that yes, valuations will probably adjust because earnings will be adjusted lower, no? But in our case, what I'm seeing is the volatility value far exceeds, okay, the what I would consider even a markdown, forward earnings. So I think that it's really, it's panic pricing. Nevertheless, I mean, pure and simple. It's panic pricing. So it's irrational. And in my case, I see it this way, that's why I'm not afraid to lose money in this situation. Why? If things are really going to turn out to be doomsday, everybody's going to be affected by this virus, by this virus. A lot of people are going to get killed, me included. So what's the use of the money, right? What's the use of the wealth? Okay. So what am I going to lose? When money and wealth is not going to be of any use to anyone anyway. So I go to the next line of logic, okay? That this will all pass. You have seen, the Ayalas, MVP, Tony Tan Kaktiong, or Ernesto, uh, Lance Gokong Wei, you know, um, easing up on their P&Ls.
Mm,
Okay,
mm,
nobody's talking about P&L right now.
mm,
What people are talking about now is how to um, what do you call this? How to counteract this calamity that we're facing. You know, the government has said we are in a state of calamity. So as far as those guys are concerned, you know, it's going to be a going concern going forward, assuming that we don't hit doomsday, which I think we won't hit doomsday anyway. So with that in mind, no, I still have a few of my funds in money market or in fixed income, and I'm just waiting for a decent opportunity, you know. But what I'm doing is I'm really going through uh, stocks one by one and see how um, they will actually, uh, you know, continue doing business. For example, the phone companies or the utility companies.
mm,
Companies, just as you and I are seeing now, no, everybody's so dependent on broadband,
mhm,
no,
mhm,
on communication.
mhm,
So surely, you know, maybe they will postpone billing us for 1 month, which they've said, but
mhm,
definitely that billing cycle will catch up,
mhm,
no? And uh, and you know, revenues will remain, margins will remain. Um, Same with you know, a company like Meralco or Aboitices with their Veco and Davao Lights, and they'll continue to collect monthly bills. So where are we, or what are we so worried about them, let's say 2 or 3 months after this virus passes? No?
mhm,
You can go down the line. You can go, you know, with the banks, of course, there would be loan loss provisions that will be increased. But the BSP themselves have said, you know, they can be a bit more lenient in these, you know, the provisions.
mhm.
And then of course there's also lower interest rates. Property companies, you know, they might feel a bit of a pinch. I really think that property prices have gone too high, and you know, there is a need for consolidation, and I think this is a good opportunity for property prices to eventually arrive at fair, you know, better valuations. And by that I mean, you know, when property rental yields go significantly below, you know, 4 or 5%, they're about 2% right now, or even less. No, then you know that it's people are just looking at appreciation and not uh, by earning. So there you have, yeah, you know, it's really consolidation time. So maybe it's not a good time for property, but for rentals, no, for the large companies that can eventually move towards REITs, no,
Mm,
then you know, it's a novelty idea. People will probably uh, ride
mm,
on
mm,
that new idea, and REITs have been something that has been very useful and shall we say had provided good risk rewards, no, in markets like Singapore, the US, of
mm.
course in Europe. No? So um, again, you can be selective in property, but again, you know, it's really, as far as I'm concerned, no, if we're not going to approach doomsday, this is this is an unusually rare opportunity.
I I have a question on that. No, they one of the questions that people would normally ask is, since the market is very very bearish, do you suggest that people wait until we consolidate, or would this be a good time already, since the upside from, even just looking at the index, the upside from 4.5 to our highest point at 9,000 is already big compared to the possible retracement that it could still go. Parang risk reward. The risk is still, there's a lot of fears still, but because we've gone down so much already, the potential upside may be bigger? Or do you suggest that they wait until a consolidation would happen and all of these fears of the COVID is gone?
Okay. For one thing, I am not looking at 9,000 as a reference. No?
Mm-hmm.
Like I said, I'm looking at 6.8.
Mm-hmm.
No, 6.8, maybe 6.5. But when you look at 6.5 and or 6.8 with reference to 4.5, that's like a 40% upside. No, I'm also a prudent investor, meaning I don't enter the market all at once or with an entire with my entire available cash. I would probably maybe on some of my, well, this is my personal or pragmatic exercise. No, I have some, for example, I have some Meralco, which I just received 10.55 pesos dividend.
Mm-hmm.
So I will likely invest that dividend in Meralco at today's price. I
Mm-hmm.
also have some DPIs, no, that I am going to receive some dividends. I will I will also, as soon as I get those dividends, I will also buy some DPIs. So that's my strategy right now. I actually, because I was relatively cautious last year in 2019, I only bought stocks that I thought was capable of delivering the regular dividends. No, uh, so that's really my strategy. Averaging down on those stocks that I have um, a position in, stocks that I really like. No, and right at this point they're quite conservative. No? Then of course there will be stocks that I think when people return to the market, they will likely lead it, no? Like the stocks like SMPH or BDO, which are the or SM, which are the largest capitalization stock. And when fund managers or foreign fund managers, even local fund managers, want to get back into the index, these are the first stocks that they'll buy. So it's it's a situation where you want to buy value, dividend, and you also want to take advantage of momentum when it comes.
Mm.
So
In
that's my view. That's the strategy.
I have another question on that. There are some conglomerates that were heavily battered today. GT Capital, I saw it intraday hit 290 pesos per share. JG Summit, is it prudent also to look at those conglomerates, or because JG Summit has Cebu Pacific, they're one of the most affected, uh, or because that they're just so big and they just got battered so much, there's a bigger chance when money also will come in, they have a chance also that funds will flow into them as well.
Well, if you're going to do if you're going to do value, no, you probably will not choose those stocks yet.
Mm-hmm.
No, you'll probably wait for a while. No, and if you're going for momentum, those are not really the momentum stocks. No, like I said, the moment. I mean, you and I have observed this market all along. The momentum stocks are the largest capitalization ones. Okay, so you're really talking about SM, BDO, SM Prime, and then followed by the maybe the large telcos. Yeah, you can look at the market caps, no? Large telcos. Um, there are there were issues, for example, that I think Ayala had been facing prior to this drop, like the Manila water issue. Same thing with Metro Pacific, no, the Manila water issue. So we cannot ignore them at the time for even at these rock bottom valuations. No? So we go for issues that or those counters that do not have any serious regulatory, even political issues, no, and are visibly, um, going to continue earnings at this point.
Mm.
So, I think one of the best bets really would be telcos. They were such an unwanted sector last year,
Mm.
but uh, I mean, from the time I woke up this morning up to now, I'm so dependent on internet and broadband,
Mm.
which I think millions of Filipinos are right now.
Yeah.
So it's there. I mean, all you have to do is think about it.
Yeah. Great insights. So yeah, I really believe that data would be used so much right now. Just a question lang on where we are, no. Having experienced the 1997 crash, then 2008 crash, then where we are today, how different is this? That nung 2008, it really didn't affect domestic consumption. Ngayon, everyone's scared to go out. Everyone doesn't spend. How do you think this will play out in terms of our economy as a whole since we're consumption driven?
Most certainly, this next month or so, we'll see a significant drop in consumer spending. Um, I mean, I think even OFWs will have a difficult time remitting money back. No, uh, lower income people will be struggling with wages. I'm worried about those people that earn from day to day. Uh, I was I was really concerned because I play golf and I think na kawawa naman yung mga caddy, they can only earn when somebody plays golf, no? And the golf courses are closed.
Mm.
So people like those, no? There's a good thing like uh, our company, the drivers and the messengers are still going to receive their pay. No? These are the lowest rung on our salary scales. No? So definitely, and because normally those guys are pegged to minimum wages. No? And well, good thing that there was already a decision that they would continue to receive their pay. But
Mm.
I'm worried about the people who like maybe sari stores, small retail, uh, those that depend on um, what do you call this, no?
Daily earnings.
Like yeah, on daily earnings, no. Mabuti pa nga yung mga logistics company, no. Today, I already received two Lala Move deliveries.
Okay.
So those guys, one was some basta we received two. One was a big package, one was a small envelope.
Mm.
So you can see that there are people that are still benefiting. I think Grab, for example, no? Because people are ordering food rather than going out.
Mm.
Uh, a handful of food stores will be uh, will be making money. But I just hope that those guys like the Angkas people, I hope they find some kind of compensatory income, no, for this thing. But that certainly is going to dampen consumer spendings. Remember, for example, airlines. Can you imagine the logistics behind airlines?
Mm.
And that's you know, like 70% down. Uh, so that tells you that the amount of consumption that those involved in that business will really significantly go down. Somebody was telling me that since December, since China, uh, what do you call this now, had started to struggle with with domestic um, situation, the domestic situation, although it was not yet completely announced. It's almost 3 months now. Uh, a logistics company which used to, um, you know, which used to take out, hundred or so containers from the port from MICT. All of a sudden, they have zero.
Oh,
You know,
wow.
siguro if they were taking out maybe 140-foot containers a month, in the last 2 months, nada, nothing, zero, no
Mm,
cash flow.
mm,
So pity those truck drivers, pity the ones who handle the, the forklifts, it's that's just the case. So it's going to be tough
mhm,
for people like those. So
mhm,
consumption spending definitely will die. And we will, first and second quarters of this year will have to be written off. But I think, once we get through this, then we start to taper off and slowly claw back into the uh, the core growth of the economy, which is at least 5%. That's core growth. I mean, whether we like it or not, that growth that growth momentum has already been established.
mm,
So if, for example, normally a reaction to a a recovery from a situation like this uh, tends to spike growth, no? Spike growth a bit more. You saw that in 2010, for example, no? uh, about the first and the second quarters of 2010, when you had 7% growth. And that was really the reaction to the 2008, 2009 global recession.
mm.
So when things normalize, yes, we will have, in the initial quarter of recovery, you will certainly see a spike in GDP.
Wow.
Certainly.
Just to end na lang for especially for people watching this uh that have lost money, they bought at the top, but they have cash, then they have a long horizon. Um, in the midst of fear, a lot of people tend to panic. What's your word of advice for them, especially for those who are relatively new to either direct stock investing or buying? They just bought an index fund for the first time, and then it's their first time to really see a big amount of loss. What can you tell them? What should they do? And words of wisdom.
Well, I think if they've already seen quite a bit of loss at this point in time, then they've learned with their gut how investors, ought to be.
Mm,
Okay. Now, if they own good counters, like I mentioned, counters that pay regular dividends, counters that still have good prospect, which I think a good number of our listed companies are, then they can they can simply hold on. The tendency now is that when they see a spike, they will sell.
mm,
No? I think that will be the natural reaction. So again, at that point in time, I would reassess, no, whether the risk is still, shall we say, still overvalued, i.e., the product is still cheap, or it's really time to generate cash. Again, coming from such a low base as this, I don't know. I think it'll be quite a while until we see this market going to be expensive again. And
mm,
when the market is expensive, that's really the time that you should sell. When the market is cheap, you look for bargains,
mm,
no? sabi nga ni Warren Buffett, housewives will probably make the best investors. Why? Because they know when to buy when bargains are available,
Mhm.
and they don't buy what is not cheap.
Oh, oh. Thank you for thank you for the words of wisdom. And how long have you been investing in the market? 30 years? 40 years?
Well, I've been in financial markets for quite a while. So I've seen my losses, I've seen my gains, and one of the worst times was really between the year 2000 and 2003, 2004, actually up to early 2005. Those were the worst times. And but that was really a period of economic restructuring for this country.
Mm.
No? That was a period when uh, power was not readily available all the time, and we were restructuring the power industry. That's a time when we had very thin foreign exchange reserves. That was a time when distribution uh, facilities for goods and services in this country was not as developed as it is today, when logistics were not as developed. No, but ever since 2010, things have already been different. Okay, we are in a different economic structure, economic structural level. Remember, we have less poverty now, no? So it's easy to move forward. We
Mm.
have more international reserves now. We have a good credit rating that really tells you that
Hello?
hey Marvin, I lost you. I'm
Okay,
back.
back. I don't know what happened. Okay,
Yeah.
back.
Anyway, so I was saying that the worst time was between 2000 and 2000 and early 2005, because at that time, power was very thin. They were restructuring the power industry. Uh, uh, Local distribution networks for goods and services, i.e., logistics, were not as developed as today. We did not have enough foreign exchange reserves. As today, we have more than enough. Uh, uh, the banks were also restructuring. If you recall, BDO only came to being in 2006.
Mm.
Um, and then you fast forward, you go to 2010, currency started to be more stable, more available. Um, Bits and pieces of infrastructure started to be developed. NLEX, SETEX, extension of SLEX, uh, well, some minor airports like Langindingan, but again, you fast forward to 2013, you have a investment grade credit rating for the country. And, you know, when you look at that, if you look at New York or the USA as ground zero for risk, no, we were like in 2005 or 2000, we were like, 100 kilometers away from zero risk. Now we are at least triple B plus, which means we are like 20 kilometers away from zero risk.
Mm.
Okay? So that is the magnitude of the difference in economic situation at the turn of the century, at the time when the market was really really bad, and now, I mean, really really bad because of the Asian financial crisis, and now, no. like you said, the global financial crisis did not affect us that badly. So I look at the Asian financial crisis and like the 5, 6 years that followed after that as the worst time. I don't see that uh, recurring when the COVID-19 is behind us.
Wow. All right. Thank you so much for that. It's nice to hear from experience also, especially when you stretch it out from 20 to 30 plus years of investing. And I think that's what people also need, especially when there's a lot of fear and panic. People don't tend to analyze and look at things, and they tend to sell out of uh, pure frustration also. And so thank you so much for this time. Up until now, I really look up to the things that you taught me before. Galing, galing.
Hey, all the best to you, Marvin. I've been following you. You've been doing very well. Thumbs up to you, bro. Thumbs up.
Thank you, thank you. And I hope that this people learn a lot from this video as well. So thank you so much. God bless you.
God bless. God bless you.
Thank you.